Thank you for joining us at xm.com for the weekly outlook. I'm Christina Marujos, and with me today is senior investment analyst Marios Hadjikyriacos, and we'll be having a look at the most important event coming up next week. Marios, let's start with the Eurozone, where we're expecting a barrage of PMIs on Tuesday. We've seen the European Central Bank adamantly repeating that there won't be a rate hike in 2022, yet markets don't seem completely convinced. Why do you think we have this disconnect? And can the latest PMIs offer some clarity?
Hello, Christina. That's a really interesting question. So why are the markets expecting a rate increase next year from the ECB when the central bank itself has stressed repeatedly that they're not going to do that? I think it comes down to inflation. Investors are seeing inflationary pressures strengthen in the euro area, and they are betting that that is going to eventually force the ECB into raising rates. However, I think that's very unlikely, at least for next year. Now, the ECB knows the economy, the Eurozone economy is not strong enough to handle higher interest rates. The labor market, for example, is still miles away from a full recovery. And if they were to stop quantitative easing and then raise interest rates, that could revive fears about the debt sustainability of large economies like Italy, for example, and that could spark, a panic in the bond markets again, or at least that's a risk. And of course, the ECB already tried that in 2011. They raised interest rates to fight inflation that wasn't really there. That backfired spectacularly. It made the entire European debt crisis much worse. So I think they're going to be very hesitant. They don't want to repeat the same mistake twice. Now, especially, of course, when we have so many risks around the euro area right now. We have the surge in energy prices that is squeezing consumers. We have China slowing down. That's bad news for European exports. And of course, we've seen lockdowns return again. Austria and the Netherlands have imposed a partial lockdown. Germany could be next. So I think the ECB is going to be very careful with signs that growth is going to slow down, and the upcoming PMIs could finally convince investors that the ECB is not going to raise interest rates anytime soon. I think there's a strong risk that PMIs will sink further. We've had, between the new COVID restrictions, higher inflation, China slowing down, there's one risk too many threatening the euro area right now. So we could see the PMIs sinking further. That would signal slower growth ahead for the Eurozone, and that could deal another blow to the euro.
Crossing into the United States now, we have a busy week as well with a lot of data releases and the release of the latest FOMC minutes on Wednesday. Now, the Fed has been fairly clear on its plans on tapering and, of course, rate hikes. Do you think the minutes might have any surprises in store for us?
I don't think so. The minutes are always important, but ever since that meeting, we've heard almost every Fed official speak publicly. So we have a really good idea of where everyone stands. Now, overall, I would argue that the outlook for the dollar remains quite positive. Now, the American economy is probably the strongest major economy, anywhere at this point. Consumption has been phenomenal. Inflation is hot. Lost jobs are coming back quickly. Wages are finally firing up. And if you look at business surveys, they suggest that we're going to see even stronger growth in the final quarter of the year. And on top of everything, Congress is about to bring even more spending to this party. So when we blend everything together, I think that the Fed could still surprise markets at how quickly they raise interest rates. Right now, the markets are pricing in 2 rate increases by the Fed next year and a 50% probability for a third one. Now, if we continue getting strong data, I think that the markets could price in the third rate hike fully, and that would be that could be an additional boost for the dollar.
And speaking of raising rates, let's have a look at New Zealand, where the RBNZ meets on Wednesday amid high expectations of a rate hike by markets. So much so that the question is whether they will signal a single or double rate hike. What do you think policymakers will do on Wednesday?
I think it's going to be just a single. So there are really good arguments about why they should raise interest rates. The unemployment rate is at a record low. Inflationary pressures are intensifying. The housing market is on fire. But why would you go for a double rate hike? That would risk shocking the economy at a time when there are still several risks on the radar. So COVID infections are spreading across New Zealand. China is slowing down. That's bad news for New Zealand's commodity exports. So it makes much more sense to go for a regular 25 basis points rate hike. And if that's the case, that would be seen as a disappointment by the New Zealand dollar because the markets are pricing in about even chances for a double rate hike.
It looks like it's going to be another interesting week. Marios, thank you for joining me. This was the Weekly Outlook here at XM.com.